Welcome to Smart Stock Watch, your go-to channel for in-depth financial analysis. Today is May 12th, 2025, and we're diving into the first quarter earnings report of Atlanta Braves Holdings. Joining us is John, a senior analyst from Smart Stock Watch. John, thanks for being here.
Thank you for having me. It's a pleasure to discuss the financial performance of Atlanta Braves Holdings, a company that not only manages the Major League Baseball franchise, but also has a significant real estate portfolio with the BATRA Atlanta.
Absolutely, John. Let's get started with the highlights from their latest earnings report. Revenue and profitability overview. Let's start with the top line. Atlanta Braves Holdings reported a total revenue of $47 million for the first quarter of 2025, which is a 27% increase compared to the same period last year. John, can you break down these numbers for us?
Absolutely. The revenue growth is quite impressive, driven primarily by a 30% increase in baseball revenue, which reached $29 million. This was largely due to higher broadcasting revenue and events held at Truist Park. Additionally, the mixed-use development segment contributed $19 million, up 23% from the previous year, thanks to increased rental income and sponsorship revenue.
It's interesting to see such robust growth in both segments. What about their profitability metrics?
Well, the adjusted OIBDA improved by 15% to a loss of $28.5 million, indicating that while they are still operating at a loss, the gap is narrowing as revenue growth outpaces the increase in operating costs.
EPS forecast and actual results. Now let's talk about earnings per share. Analysts had forecasted an EPS of 94 cents. How did the actual results compare?
The actual EPS came in at 66 cents, which is significantly better than the forecast. This indicates that the company managed to control costs better than expected, despite the challenges in the current economic environment.
And that's a notable beat on expectations. What do you think contributed to this outperformance?
The improvement can be attributed to the strong revenue growth and effective cost management, particularly in their mixed-use development operations, which saw a 30% increase in adjusted OIBDA.
Operational efficiencies and future outlook. John, let's delve into their operational efficiencies and future outlook. The company reported an operating income loss of $44.5 million. How does this align with their cash and debt situation?
Despite the operating loss, Atlanta Braves Holdings saw a significant increase in cash, up by $135 million, primarily due to cash from operations and net borrowings. However, their debt also increased by $82 million, mainly to support capital projects and real estate acquisitions.
What does this mean for their future outlook?
It suggests that while they are investing heavily in their operations and development projects, they are also managing their cash flow effectively. This positions them well for future growth, especially if they continue to capitalize on their mixed-use development and baseball operations.
Key takeaways. To wrap up, Atlanta Braves Holdings has shown strong revenue growth and better than expected earnings per share for the first quarter of 2025. John, any final thoughts on their investment prospects?
Overall, the company is on a positive trajectory with robust revenue growth and effective cost management. Their strategic investments in mixed-use development and baseball operations are likely to yield long-term benefits. Investors should keep an eye on their debt levels, but the current outlook is promising.
Thank you, John, for your insights. And thank you to our viewers for tuning in. Don't forget to like, share, and subscribe to Smart Stock Watch for more financial analyses. We'd love to hear your thoughts on Atlanta Braves Holdings' performance in the comments below.